Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking euro currency futures, which finished about 32 basis points higher, a little more than 0.25%. Some news we got yesterday was Norway's central bank, which had been pretty dovish as of late, talked about raising their key bank interest rate prior to their November 2018 elections. Now, that may not sound like a big deal in relation to the euro itself or even in relation to the Central Bank of Norway specifically, but it's very unlikely that the Norwegian Central Bank will go on a rate hike prior to the ECB. It's just not the way they've done things in the past. The economies are way too connected, so it's unlikely to happen unless, of course, there is some sort of hint that the ECB is going to get slightly more dovish. Now, that's conspiracy theory level stuff. No one is saying the two speak to each other before they make announcements, but the euro is rallying a little bit off of that news. If you look at a short-term chart, that is when a little bit of the rally started after that news came out. We've also got dollar weakness, which of course in the cash market, largest pair traded is euro versus US dollar. So you're always going to see the euro benefit the most from some dollar weakness, but the dollar index, which is a basket of currency, has shown tremendous weakness despite the anticipated passing of the Republican tax reform bill. Even though that's passing, that's going to push dollars into the system, which in theory would weaken the dollar. It is not sparking people to think that the Federal Reserve in the U.S. is going to get more aggressive on the three rate hikes they're predicting for 2018. So the dollar is weakening, although longer-term yields in the U.S. are rising a little bit. See the 10-year note back above 238 today, which we haven't seen in a little while. That's anticipating inflation, not necessarily a rate hike from the Fed or an extra rate hike from the Fed. And then moving over to the German 10-year, the German Bund, which is the benchmark for the EU, it being the largest economy and the highest rated bond in the EU. That yield curve is the flattest it's been in just about 11 months, just short of 11 months, at 172 basis points. Flat yield curve could anticipate some slowing in the economy if it were to go there. Again, if your central bank is raising rates and long-term, your longer-term dated paper is not reflecting inflation, that'll result in a yield curve flattening, and if that curve inverts, could predict a recession. No one is calling for a recession in Germany, but it goes along with the theme of a stronger euro and at least a potentially more aggressive ECB. Again, this is being talked about based on outside factors. Mario Draghi has said nothing, and the ECB is not pointing this in this direction at all. This is Bob Iaccino talking euro currency futures from the CME Group trading floor in Chicago.